Hello, everyone, and welcome to the Altos Trading Live Strategy Session with Jeff Tompkins. This is your host, Richard Van Rich, and we have Craig Ward with us in the chat. Well, we're excited to have you guys with us here tonight. An exciting week so far in the market. Glad to have you here with us. If this is your first time on our session, you'll notice that your microphones are all muted. That's so we can all hear Jeff and I talk, but there is a Q&A box located at the bottom of your screen. So if you have any questions about tonight, put those in the Q&A box or the chat, and we'll get to those periodically. If you have any questions about your account, access to Trade Trend, any open trade alerts, anything regarding trade trends, Zillion, anything like that that's personal to you in your account, email support@autostrading.com, and we'll get to those sometime tomorrow. If you have to hop off for any reason, don't worry. This is being recorded and will be available in the members area later tonight and also on YouTube sometime tomorrow. So if you're watching on YouTube, please like and subscribe so you can catch more of our videos as we're posting those every single week. So before we bring on Jeff, let me just read a disclaimer. Altos Trading LLC and Trade Trend Zillion software is intended to be used as an information service for subscribers, and it includes opinions as to buying, selling, and holding various stocks and other securities. However, the publishers of Altos Trading, Trade Trend Zillion software are not brokers or investment advisors and do not provide investment advice or recommendations directly to any particular subscriber or in view of the particular circumstances of any particular person. Altos Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software and subscribers to the Trade Trend Zillion software. Any persons who buy, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. All right, with that being said, let me bring on Jeff. Jeff, you there?
I am here. Hello.
Hey. How's it going?
Hey, not too bad. How's everybody doing out there?
That's right. How's everybody doing out there?
Hey, Manchu. Hope you're doing well too. Good to see you on. I think you're dialing in from my old stomping ground, San Francisco. Hey, Tim. Good to see you. Great to have all you guys on. Hey, Jim. So yeah, we've got a lot going on in the markets this week. Really what's driving things is we've got this slew of earnings coming out, which is kind of pushing the markets back and forth. So we had a nice rally the last last few trading days, and then stalled out a bit today. And now futures are down a bit after hours. You know, it's really all event driven. It's all earnings at this point. So we're going to likely continue to see some of this back and forth this week, I think. Typically, you know, earnings are the effects are, you know, somewhat short-lived, and of course it depends on the company's reporting, how, you know, the market cap and how much of the index they make up and what the ripple effect there is. So don't want to get too caught up in it, but just, you know, have it on the radar. There are a lot of quarterly earnings coming out this week. But we'll take a look at our key levels and where things currently reside. We are looking quite bullish to start out the year for the month of January. So we'll take a look at the levels to be watching this week on the major indices, also what the VIX is doing. We'll take a look at the 36-month moving average. We have just a week left of trading in January, and it's looking like very high probability we're going to have a strong close above the 36-month moving average, which is significant because as we get further into 2023, that might give us an indication of a potential market rebound this year after the bear market sell-off of 2022. And then for our topic sessions, and our session topic, dyslexia, we're going to focus on, you know, we kind of do a mix of strategy, indicators, different methodologies on our weekly sessions. We haven't really focused on indicators lately, so we're going to take a look at one that I use, which is the Parabolic SAR, the stop and reversed indicator, and in particular how I use that with the trade trend indicator. So that's going to be our focus for tonight. And then we'll, if time permits, we'll open it up to ticker roundtable and wrap up with our Q&A. So let's go ahead and take a look at our key levels on the major indices for this week and beyond. So let me get over to the S&P 500. So we'll start out with the SPX. Oh, did we not have? We don't have today's data yet. Let me just refresh this again here. Oh, there we go. Okay, so all right, so the downturn that we saw today, again, was largely event driven by QE quarterly earnings reports. So we might see a bit of chop this week. Oops, I'm on Agilents. Sorry, guys. Go over. Oh, why is my S&P data not refreshing? Let me give this another go. All right, looks like our data has not come through yet, so I'm just going to switch over to the Thinkorswim platform. Let's go over to the daily chart. All right, so we gapped down again this morning, largely QE based, but we are at a key support level, and we broke 4,000, our millennial mark. So let me just map out these levels for you so you can have an idea of what to watch this week. If we look at 4,000, which we've been there many times in the past, right? And last week we looked at the let me zoom out here. The trend line. Let me just stay at this. That we encountered and sold off from, right, when we met last week, and there was the confluence between that horizontal 4,000 resistance level and our downtrending line that I warned you to keep an eye on, because I think it was here on the 17th when we last met, we'd seen a little bit of rejection and volatility contraction leading up into this downtrending trend line resistance. And then the next day, of course, got a big sell-off from that level, volatility expansion, and went right down into support around 3,900. So that's 3,900 is a lower level of support to keep an eye on. If we do break 4,000, which is a possibility, like with earnings, the slew of earnings releases we have on the horizon, if we break 4,000 and more earnings trickle in and they're not looking so hot, we could get back down into support at 3,900. So if we break 4,000, then look for a rotation lower into this 3,900 support level, because that's really our key support level below the 4,000 millennial mark. But as it stands right now, 4,000 is our in terms of proximity, our nearest level to really keep an eye on, because we closed above again today. So we've had two closes above 4,000, which will remain a very strong support level as long as we can maintain closes above 4,000. And if we do, and my rule of thumb is I like to see like a minimum of 3, ideally like 4 or 5 closes above one of these levels that we map on our weekly sessions for confirmation that level is going to hold. The more closes we get above a support level or below a resistance level, that stronger that level becomes in the near term. And so 4,000 is really the one to watch this week as more earnings announcements are released. And if we can maintain closes above 4,000, even in the midst of not so hot earnings, or maybe the earnings are better than expected, and we do continue to rotate higher, that's going to be our key level. And as long as we stay above it, that's bodes well for the markets. Also, what's occurred is we've broken this downtrend resistance line, right, that we talked about last week. So we got that breakout yesterday, right, and it was not just a breakout, but it was on strong upside momentum with volatility expansion. So today we just got a bit of volatility contraction, and of course the gap lower at the open, but still, and then we closed lower than we did yesterday, but off the open this morning we got a higher close. So and on top of that, above the 4,000 millennial mark. So that's all really bullish in the broader perspective. So just really keep an eye on this 4,000 level the rest of this week as more earnings come out. Again, right now the futures are down about 1/3%. So I'm keeping an eye on those, but the E-mini S&P futures are still above 4,000. They're trading at 40.20 right now. So very near term, we want to see markets push through the highs from yesterday to gather more momentum. If that happens, then this, even though we've broken this downtrending resistance line, that's going to add a lot more weight to this breakout of the downtrend line. So really watch for a close above yesterday's high, which was at 40.39.31, and so that brings us to a couple of resistance levels to keep an eye on, 40.50 being a half-century mark, and the stronger one being at 4,100, our century mark level. And you can see that actually closely coincides with our downtrend resistance. You can see that on these two particular trading days, we came up near the 4,100 resistance, century mark resistance level, which also coincided with our downtrend resistance. Yeah, again, it's probably going to be a bit of a choppy week, just because you get an earnings release, and whether it's positive or negative, another one quickly comes out, and then does it trump it? Does it add to the previous directional bias from prior earnings releases, all those things. So as long as we stay above 4,000, that's a good sign for the markets. Any strong close below 4,000, then look for another rotation down into at least the 3,900 level, which is our strongest, below 4,000, our strongest lower level of support. And then as it relates to the NASDAQ, look at the Qs. We've got this is kind of equivalent to our 4,000 level on the SPX. We've got 283 as our nearest level of strong support, and so we want to keep an eye on this level to see if it holds. Now, last week I also talked about how we hadn't quite come up to the resistance trend line on the NASDAQ, but now that's happened. And so see how we've hit that trend line, which coincides with the 290 level, roughly, horizontal level. But we've encountered that yesterday and then stalled at it on the close again today. So when we look at these two indices together, the NASDAQ and the S&P, if we can get above a close above yesterday's high, just like if we could get a close above yesterday's high on the S&P, that will provide more weight behind validity behind the a breakout of this downtrend line. So what we'll likely see if that plays out is a move outside of the trend line to the upside, and then potentially a retest for support. So just like with our horizontal levels, the trend line support and resistance, like for trend line resistance in this case, when it's broken, it then becomes trend line support. And trend line breaks can be very, especially when they coincide with like a key horizontal level, very strong levels of support when they break. So if we do get that on the NASDAQ, in addition to the S&P, I expect that we're going to see some significant up moves in the market. Until we, and then we're of course going to be waiting for January CPI and other things that will also determine how the markets move through the rest of Q1. And then if we take a look at the VIX, let's see what the VIX is doing, because we've had this run up in the market in the major indices, the broader markets over the last couple of days. And so we've seen a rotation lower on the VIX. We got a bit of a VIX spike last week. In our session last Tuesday, I talked about my my VIX debit spread that I put on with a little more than 60 days out in expiration to provide myself an opportunity for a significant VIX spike. And I'm really looking for one up into the like at least 25 level, but ideally up like 29 to 35 to really make some money on that. We got a minor one last week, and we actually got a trade trend buy that occurred on a day when we closed above the 20 level. And again, I like to see these near or ideally below the 20 level to forecast a VIX spike, but no follow through, right? So we didn't actually trade above the candle of the trade trend signal, which would trigger an entry. And so the last the last 3 days, we rotated lower. And so this is, as of the close today, no longer a valid signal with follow through. You can see the buy stop entries just a few ticks above 2185. So we didn't get the follow through. But what I ended up doing is I sold some index options on futures on the ES. I sold some puts, and I talked about legging into that type of adjustment on the ES to finance the cost that what I paid for the VIX debit spread. And I was actually able to do that for a debit that nearly covers the cost of my spread. So even at the VIX, I mean, again, I've got like 60 more days, like maybe 55 days for the VIX to spike up. So it's highly likely that'll happen. But in the meantime, I collected premium to finance the cost of the VIX spread. So we talked about that on last week's session. But today we're back down below 20. So we're still kind of hovering in this low volatility zone, which to me is a bit surprising because we've got the slew of quarterly earnings on the horizon, and typically the anticipation of those earnings, especially in the context of the current market environment, will cause volatility to go up, even if the market's not selling off. So kind of interesting there. And so maybe that might be telling us that there's some knowledge that we're not aware of, or market participants are basically not expecting these quarterly earnings that are coming out this week and next week to do much damage to the market. That's kind of the story the VIX is telling us right now. So as long as we remain below 20, that kind of adds to the conviction behind the sentiment that we're seeing across the major indices. And so if we look at the lines up also with what the S&P monthly chart is telling us. So if we go over to a monthly chart of the SPX and look at our 36-month moving average, which we actually got a buy signal, trade trend buy signal last month. So the month of December, this is that candle from last month, interestingly, a bearish candle and a close below the 36-month moving average, but the algorithm is actually picking up a potential shift in momentum back to the upside. So we got that buy signal last December. I don't think I pointed that out in previous weekly sessions this month, but we did get that. It hasn't reached the trigger price yet. That currently resides at 41.44. So we need to get, a S&P print up above last month's candle at 41.44.38, right? So just kind of right in this neighborhood, and we haven't gotten up there yet. But if we look at January's candle, we've got bullish price action this month as it relates to two key levels, one static and one dynamic. So our static level, which resides at a half century mark 38.55, is our bear market line, right? And you can see that all of this chop around the bear market line, right? So we're out of technical bear market territory on the S&P, but that bear market line closely coincides, and now actually it was last week too when we looked at it. The 36-month moving average has risen above that horizontal level, so that's bullish. And of course, when we look at January, we got a gap up on the open of the month from the close in December, and we're trading near the highs of the month, and again above 4,000 and above the 36-month moving average in bear market territory. So bullish for January so far. Then we need to consider that we've got a week left of trading in the month, so we don't know where we're going to end up by next Tuesday, but we are currently an inside candle month. So our high and low so far for January reside within the range of December, which is telling us there's some volatility contraction from moving into the new year from December, and but it's bullish, right? So I really like this trade trend signal on the monthly chart. I don't often trade trend signals off the monthly, but I typically will trade them off the daily chart, but I will use the weekly and monthly charts to look for the signals to line up with the higher time frame trends. And so if S&P can get up to this triggered entry price at 41.44 and change on the monthly, I've got some longer term long positions in index ETFs like the SPY and the Qs. I may look at adding to those positions on a breakout, and if we're able to touch this level that the trade trend algorithm has given us off the monthly chart signal. So that's the scoop on the major indices and the VIX and the key levels to keep an eye on for this week. So any questions there, Richard?
Let's see. Mike saying he kind of expects the VIX to spike slightly ahead of the February 1st meeting. If you're watching that or not.
Yeah. Yeah, I don't think the VIX is going to move a whole lot lower from here. I think, again, depending on what happens with earnings, we could kind of hover in the 19 to 20 zone. I'd be surprised if it moves significantly lower, but probably the more likely scenario is a VIX spike here on the horizon, because we typically will get one in January, February of a new trading year. So I think I agree. I think it's likely.
And Leanie's asking if any of these positions you're looking at, if so, are you doing options? And if you're going to put anything on, would you do like expiration date or anything on Delta, or how would you set anything up long term?
So again, right now I've got a VIX debit spread that's set to expire a couple months from now. So I'm just really looking for a VIX spike, and then I financed the purchase of that by selling far out of the money premium on the E-mini S&P futures. Reason being, and that trade is making money right now because the S&P is rotating higher. So it's kind of like a hedged scenario where if my VIX debit spread, it's a call debit spread, isn't making money. In other words, the VIX isn't spiking. Then I'm making money on my short puts, which are financing the purchase of that. It's called a risk reversal trade. They can be done within one security or across multiple securities, which I did in this case. I bought the VIX spread and sold the E-mini S&P futures options. And for those, if I'm selling puts or calls on like a major index like the S&P, or options on futures like the ES, which is the S&P 500 futures options, I sell very low deltas, like even as low as a 5 delta, but it's probably somewhere between a 5 and a 10 delta. Yeah, as far as that, so that's kind of like how I'm playing the markets right now. Whenever the VIX gets below, let's see here. Whenever the VIX gets below 20, I typically will play, a potential spike, just because, especially when we have such a significant retreat from a major resistance zone, which is kind of right between 30, 35. You can see when we've had past VIX prints in that resistance zone range, we get a quick retreat back down into 20, and then within a relatively short period of time, we get a VIX spike again. And we did get one of those back in November, December. This month so far, we've just got a little spike here. So I didn't take profits on even though I had open profits on my VIX call debit spread. I didn't take them off the table. I kept them open because it's just not enough of a spike. But if you look back in like March last year, when we were also down at similar levels on the VIX, you can see, it's very similar price action. We got a bit of a spike up into that like 21 to 23 resistance level, and then another retreat until we finally got the big VIX spike. So that's this. If you look at price action from here, right, it's very similar to what's happening now. So right now we're just really back down in a major VIX support, which increases the likelihood of a VIX spike. But I want to give it plenty of time for that to occur. So I said, if you guys attended last week, I went over that trade that I did in my personal account and all the rationale behind it and what I'm looking for, giving it plenty of time, for that to happen. So that's really kind of what I'm playing right now. Outside of any like more medium to long-term positions that I've got on, which are really in the major index products like the S&P and the NASDAQ. So I'm kind of gradually building up positions in like the SPY and the Qs. And reason being because, again, if you look at the monthly, we're really in my opinion, at a value zone around the 36-month moving average. So I've done some hedging along here and stuff, and sold premium and things, but I'm really looking for a sustained move to the upside away from this average. And again, that's why I'm watching this monthly buy signal from December that Trade Trend gave us, and want to see S&P rotate up into this 41-44 level to where I might consider adding on to some positions. So if that occurs, we can revisit in future sessions. But that's kind of what I'm trading right now. But it's a bit difficult. We've got quite a bit of chop and sideways price action going back many months. So we haven't had much of a significant sustained move, but a lot of volatility. If you look at the range of going back to like mid last year, look at the range of these monthly candles, and when that's extreme volatility, right? If you look how wide the S&P monthly ranges are compared to like periods where we're in uptrends. So some of these ranges, I mean, rival the volatility we saw back in the COVID sell-off in early 2020. But it's not unusual. Like when we get mean reversion into the 36-month moving average, like we did like late 2018, we tend to see more volatility around this 36-month moving average. So you can see when price does get into this area, we see volatility expansion. So we're just seeing kind of a more drawn out volatility expansion around this level. But so far it's really holding. We just got a lot of chop around it. And based on this month's price action and that we are and January this month is really key because December we had a close back below after such a strong close in November to the upside. It's like, okay, what's going to really happen here? So had we traded below December's lows, I would have really been hedging and looking for bearish speculative opportunities, but we didn't get below there. In fact, of course, we rotated back up to, above the 36-month moving average. So now, again, we're inside the range of last month's candle. So what I'm really looking for to give me more clear direction of a sustained directional move is getting above December's high, or if this is another fake out around the 36-month moving average below. So those are the things I'm really watching to determine whether I'm hedging current long positions in my portfolio or adding to those to participate in a rebound from this value area.
So the questions I got.
Cool. So what we're going to look at an indicator that I don't know why we have not gotten our data yet. Check with our developers and see why that's. Oh, did we get it? Nope, I don't think so. Why that's delayed today. So we'll just stay on our broker charting. So one of the tools I use as far as indicators, I don't use a lot of indicators, but other than the trade trend algorithm, I don't really use other indicators solely for decision making for a trade, but I might use them for confirmation, and I certainly use some of them in combination for look for confluence to add an edge in my trades and my decision making, whether I'm trading bullish or bearish or neutral. So one of those is the parabolic stop and reverse indicator. It's in my opinion actually not a great indicator to use as a standalone, because when it gives a good signal, it can be really great, but it leads to a lot of false signals. So that's one of the drawbacks of the parabolic SAR indicator. I'm going to add it to the chart here, and I'll explain what it is if you're not familiar. So let's see here. So this is available on our Zillion platform. It's a common indicator. It's actually developed by J. Wells Wilder, the same guy that developed the relative strength index indicator. Let's see. So let's we got that on there. I'll apply it. And it's basically used to determine directional moves. It can be applied to any time frame, any asset, and it also helps us potentially time changes or shifts in trends. And again, the SAR stands for stop and reverse. So it's J. Wells Wilder really designed it for two reasons: for identifying strong directional trends, and also when that trend might be ending and reversing. Hence the stop and reverse. The stop actually it can also be used as a stop loss level. Now it's generally a pretty wide stop loss level. So like as we look at a daily chart of the S&P, so I've also got the trade trend indicator on here. You can see that if we were to use it as a stop level, it's generally significantly wider than our trade trend stop levels. So a lot of times when you get a strong directional move, our trade trend algorithmic stop levels, which are our horizontal lines, are much tighter and do a better job than the parabolic SAR indicator. So like if you look at this previous buy signal on the S&P, which had a nice run up, would have gotten us out on this rotation lower over the course of a few days, around 39.40, whereas we would have gotten stopped out down here at 38.86 if we use the parabolic SAR. So I don't actually like to use it as a trailing stop level. The algorithm design in a trade trend, I think, does a much better job. But what I do like to use it for is confirmation of directional moves. And in particular, I like to watch for it to line up with a trade trend signal. And if I can find a circumstance where the parabolic SAR indicator indicates a down move in conjunction, by that I mean like within a day or two, lines up with a trade trend sell signal. I really like those. There's actually one here, but let me back up a little bit and explain the parabolic SAR. So you see there's a series of dots, and so the idea is when price is below the dots, we're in a downtrend, and when price is above the dots, we're in an uptrend. Now, when we get a strong directional move, that's great, right? But unfortunately, it leads to it can't be followed blindly. It leads to way too many false signals. In fact, I've back tested, the parabolic SAR by itself, and it does horribly over the long term, because if you just follow it blindly, because like here's a November 3rd sell, stop and reverse sell. So we were in a strong uptrend. Price was above the parabolic SAR dots. And then we get the stop and reverse on November 3rd, and price is now below. I'll explain what causes that to happen. And terrible false signal, right? The uptrend. It was just a brief a retracement in the broader uptrend, and then that resumed. And if you'd taken a trade down here, would have suffered a pretty bad loss. So we don't want to follow, just like with the trade trend signals, we don't want to follow them blindly, right? We want to look for them to, we want to find confluence with other directional trend and momentum indicators, key horizontal support and resistance levels, and so on and so forth. So that's really what I'm looking for. And so this would be a better example where, we were in an uptrend, right? Which started back in October. And then I see this as basically, we'd broken through a key resistance level, basically a retracement or correction within a breakout uptrend. And this is actually the signal that makes sense taking, because we have a resumption of the uptrend, and we get on the very same day, a trade trend buy signal. And that actually resulted in a significant sustained upside move. Same thing with this one, right? So on the very day we get price was previously, just for 2 days, above the parabolic SAR. I'll zoom in there so you can see it a little better, right? And then we get the stop and reverse. So our parabolic SAR starts printing above the price action. And on the very same day, we get a trade trend sell signal, which then we get, a move in the anticipated direction of the downside. So what causes the parabolic SAR to actually shift from printing above the candles to below the candles? So it's pretty simple. When price actually goes below at or below the the parabolic SAR dots, then it shifts. So like you can see on this candle here, where we got the trade trend sell signal, we got the close below the previous parabolic SAR dot. So that's what caused the stop and reverse, right? So it would be stopped out and reversed, and now we're getting dots printing above the candles, right? And so, so that's really what I'm looking for, confluence, and that's how I use the parabolic SAR. Is I look for confluence between trade trend buy or sell signals and a switch in the parabolic SAR, and ideally want them to really happen. I want the trade trend signal to come in on the first one or two parabolic SAR dots. And I also want to make sure that I'm trading with the broader trend. This was a great one right here. I'll just kind of like zoom out and highlight some examples of that, right? So we had a big directional down move, right? We also had a trade trend sell, and that came in within 2 dots of the switch. We had a big down move. So in the broader context, we're in a downtrend. So after a parabolic move, and that's the other factor to consider when using the parabolic SAR, it's called parabolic for a reason. We want to use it for parabolic or strong directional moves, and then trade with those when we find the confluence between trade trend and the parabolic SAR. So we got this big parabolic down move. What's going to happen after a big parabolic move? We're going to eventually see a correction or retracement, right? So this was a counter trend retracement, right? That was good for a nice little 2-3 day move. But again, if I'm using my horizontal support and resistance levels, it went right up into resistance. And the really strong opportunity was right here, right? On day 2 of the parabolic SAR switch. So now we had price below, we had parabolic SAR below price and then switched. No trade trend signal yet, but then on day 2 of the parabolic SAR switch, we get a trade trend sell signal. Entry would have been right down here, right? So that's a confluence that I want to see in the context of trading with the trend, in this case to the downside, right? Let's see, and then here's where we had another good, so we had a trend reversal, right? So now we're back, we've broken through resistance levels, we're back in an uptrend, come down, retest, we get a parabolic SAR switch, price previously below parabolic SAR, now it switched to above, and on the very same day we get trade trend buy signal, right? So kind of a good exercise is to select, again, this can be applied to really any asset, any time frame, any security. Is select one of those, whatever you trade, or whatever market you're interested in, and then kind of go through and look for those types of opportunities. So again, I want to see here's another good example. I want to see a trade trend signal that lines up with a switch in the parabolic SAR within two parabolic SAR dots. So we're on a daily chart right now, so that would be within 2 days. If you're on a 5-minute chart, within 10 minutes, I want to see those line up. So sometimes you'll see the trade trend signal come in before the parabolic SAR switch, or vice versa. Like here's an example of trade trend sell came in before the parabolic SAR switch. So here we're on this particular day back in June, we're still above parabolic SAR, but we're in a downtrend. So we got a retracement. And if I'm waiting for a resumption of the downtrend, I'm looking for trade trend sell. Again, this came in while we're still above parabolic SAR, but the very next day, which is actually the day the trade trend signal triggered, we got the parabolic SAR switch. And again, these often are the strong signals when you find that confluence between the two. And here we had a big down move. Here's an example of another switch. So again, we want to use these in in combination with our horizontal and static horizontal support and resistance levels, as well as our dynamic dynamic support and resistance levels. But here you can see, we break through resistance. The downtrend looks like it stalled out and is reversing. We get the parabolic SAR switch. So previously price below parabolic SAR, now price above. And on the very same day, we get a trade trend buy signal, right? And very strong directional move to the upside. So again, looking for that confluence to occur within a day or two. Here's another good one, March, right? There's the switch. Okay. And so this can, when we use these in combination, it can also help us kind of weed out signals from either indicator. It can help us weed out bad parabolic SAR signals, and it can help us weed out signals from trade trend that we might want to take, right? And so here is, a sell signal. Yeah, we're in a downtrend. Let me just point this out to you. We're in a downtrend, right? This one actually didn't even, if we just use trade trend on its own, it was not a triggered signal. We didn't follow through. But in any case, we were still above the parabolic SAR, and we didn't get a switch until here, which is not within 2 candlesticks of the trade trend signal, right? Here was a buy signal I wouldn't take necessarily when I'm using this methodology, because counter trend, right? We previously had a big parabolic move to the downside, and then we have a counter trend buy signal, and price is still below the parabolic SAR, and we don't get the switch within two candles, right? Now, again, this signal is another example, because it came in, right? If you look at this sell signal from February, came in, we're still above the parabolic SAR, but we get the switch the very next day and the trigger from the trade trend entry, and there's the strong directional move, right? So both indicators can help us improve the accuracy of using either one alone, and help us weed out signals that may not be the best ones, may not be ones that we want to take. So that's, again, just looking at S&P, but we've got a little more than 10 minutes left. So when we open up the ticker roundtable, we can also take a look at some tickers you guys want to analyze and kind of see how that looks on other symbols. But before we do that, I'll pause and see if any questions have come through on that.
Roger, and what do the little round red and green dots represent?
So those are the trade trend entries. So if I'm not sure how familiar you are with the trade trend algorithm, but if you get a trade trend sell red arrow, so a sell arrow, that is not, the algorithm is not telling us to get into a short position at that point. It's giving us a future entry price below that candle. So if we come down and hit that entry price within the next 3 candles, and so we're looking at a daily chart, that would be within the next 3 days, then we hit our triggered entry. So that's why you see a red dot on the next candle, because the price that day came down into our entry level price. And those are the prices you see up in the upper left corner of the screen. If there's an active open signal, that's going to give us our entry price. So if you see the red dot, it just means that on that particular candle, we reached the entry price of the forecasted signal. So not every signal will result. So this one did as well on the sell signal, but not every candle signal will result in a triggered entry. Here's an example. There was a forecasted buy from trade trend. There's the green arrow. So our entry at the time, the algorithm would have provided it as an entry price on the chart above the high of the forecasted candle. All right, but we never came up and hit that level. You can see over the next 3 days, we rotated lower. So this was not a triggered signal. The sell signal was, right? So the sell signal triggered, you see there's a red dot. So each of these red and green arrows is valid for up to 3 candles after the signal. If it doesn't hit the triggered entry price, then it's a null signal. This one did trigger, right? So that's why you see the green dot. The location of the dot on the candle is irrelevant. It's just placed for a buy signal. It's placed at the bottom of the candle. If it triggered the signal, or for a sell signal, it's placed at the high of the candle. But it doesn't signify where the entry price would have been. Entry price for a sell would be the low of the candle for a sell signal, or above the high of a candle for a buy signal.
So Jim had a kind of side question about any updates on the broker integration Zillion's having in the near future.
Yeah, so we're still working on new broker integrations. We're really close to having TradeStation completed. So we've got Tradier working on TradeStation, and then we're also working on interactive brokers, Thinkorswim or TD Ameritrade, which now is going to be Schwab. So we've got a number of them that we're currently working on. So they'll gradually be rolled out this year. We're hoping to get a lot of those completed in the first half of this year.
Jim said, yes, TradeStation.
Yeah, we'll keep you posted as it gets closer. I don't have an actual date for you yet, but it's on the horizon.
So with this, with Parabolic SAR, do you have, is it same standard settings you use it for? If you drop down to, say, lower time frames, do you adjust the settings in any way, or you just let it?
Oh yeah, good question. I didn't go over the settings. So I don't adjust the settings for the time frame. You certainly can, but I don't find that it's really necessary. So I just use the default settings on that, and there's really 2 inputs. There's your acceleration factor, so you can move that up or down, and basically that's gonna affect how fast the dots move along with price, and then your acceleration limit. So I have the acceleration factor at 0.02 and the acceleration limit at 0.2. So yes, you can play around with those and adjust them, but those are the default settings on TOS, and I believe they're our default settings on Zillion. Take a look here. Yeah, so that's probably going to be the default settings on most, a 0.02 increment and 0.2 for your max. So same default settings on our Zillion platform as well. Any other questions there, or should we go ahead and do a few tickers?
Let me do a few tickers. I got a few of them already kind of lined up.
All right, let's go ahead and take a look at some here. Let me just refresh. I don't know why our data is not updated yet.
Let's see. XLF.
Okay, let's take a look.
They're looking at the trade trend and Parabolic SAR, wondering if it looks good to you.
XLF. Yeah, so this is our Spider financial ETF. Yeah, so yeah, this is we have had a move up over the last 4 days in the XLF, but totally valid signal, and it's still an open signal both for the Parabolic SAR and trade trend. But this is a good example of kind of what I look for. So we've got a strong horizontal resistance level, right? So we've got major resistance up here around 36 to 36.50. This is really our resistance zone here. All right, so resistance between 36, 36.50. And so once I've identified the level, then what I look for, well, what have the moves from this resistance zone been historically? We've had some fairly significant, particularly back in August, lower rotations out of this zone. We've also had some kind of minor ones, which might be this current one. followed by a retest and then a more significant rotation. So we're kind of retesting the resistance area here around 36. Back the high from today's close was just six ticks below at 35.94. So this 36 level is very strong resistance. And then as far as the confluence between trade trend and parabolic SAR, so we got, in this case, the trade trend sell signal preceded the parabolic SAR switch. So on January 18th, we got the trade trend sell signal, price still above parabolic SAR, if you can see that kind of tiny dot there, but traded right down into that parabolic SAR level, and then actually got the switch the very next day and the trigger trade trend signal. So within the context of these two signals from parabolic SAR and trade trend, we've had some retracement, but you'll notice that we've got this very strong resistance level right around 36, and still an open trade signal from trade trend and parabolic SAR, because price is still below our parabolic SAR dots. They're sloping down, so we're still getting prints below. We're also getting prints below our trade trend horizontal sell level algorithm, the trailing stop levels. So still an open signal, and it's off this key level. So if this one follows through, particularly if we trade back down below today or yesterday's lows, this one could accelerate, like we saw XLF do in previous sell-offs around those levels. And in fact, if you look at past sell signals, so these are, again, just picture perfect examples of what I'm looking for. There's on the very day we get the parabolic SAR switch. So previously price was above our parabolic SAR. We get the switch here right on, what day was this? August 19th. At the very same day, we got a trade trend sell signal. And then very beautiful move in the forecasted direction at the downside. Let's see, same thing with this one, right? There's our trade trend sell signal. On the very day we get the parabolic bearish SAR switch and big directional move to the downside. So far, historically, there's been a couple really big downward moves where we had a coinciding trade trend sell signal and a parabolic bearish parabolic SAR switch. So didn't get right on the day here. Just again, trade trend preceded that by a day, that parabolic SAR switch by a day. But we are bumping up against resistance again. So if we can get another leg lower, this one could absolutely accelerate. So a good example.
All right. Steve wants to see T like Tom, G like Georgia, T like Tom, X like X-ray, TG, TX.
Oh, I thought it was going to be Target, but TG Therapeutics. Let's see here. So you can see, like in TG Therapeutics, like where we get these very big moves, like parabolic SAR is going to accelerate quickly. So one thing kind of keep an eye out for is when parabolic SAR gets close to the dots, it could potentially signal either one of two things, like either a support level. So what I'm looking for is, do we have support, as we did here in the case of this 12 level? Again, more kind of a support zone between 1150 and 12. That's more of a retracement in the context of the broader uptrend, or it could be a trend reversal. In this case, it was a retracement, and this uptrend is resumed. I mean, the stock went up over 14% today, but great opportunity here. No, how that just happened. Sorry, something crazy happened on my other screen. So the great opportunity here, if again, you look for that confluence. So here we had a major resistance level on TGTX, right? You see major resistance around 9,950. And here we had the parabolic SAR switch. Now we don't yet have a trade trend buy signal, but that came in within 2 candles of the switch. Triggers up here, and that would have been around 12. So this picked up a huge percentage on this coinciding trade trend buy and parabolic SAR switch. Now the sell signal, I might, again, how the two indicators used in combination can help us avoid false counter trend trades. This trade trend sell signal did not occur with a bearish parabolic SAR switch. So maybe I don't want to trade it. Not to mention it was right into resistance at 12, or sorry, support. So I don't want to take a short trade into a support level. So using those different factors and looking for the confluence between them can help me stay out of bad counter trend trades. When really the opportunity here was to the upside from the signal back in December, where we saw those coincide. So that's also a good one. But this one is definitely far into the signal. We don't have another trade trend buy yet. That actually came in at the end of the year, triggered at the very start of this year.
All right. Ari's asked if you can see VAPO, VAPO.
Yeah, so there's currently an open sell signal. This is a great sell signal from trade trend alone. It's still open. So entry was at 248. This looks like a penny stock basically. And closed today 144, but it didn't coincide with a parabolic SAR switch within 2 candles. So we didn't have that confluence here on this current open sell signal, but there was a trade trend buy yesterday, which I would ignore in the context of using these two indicators together because it's counter trend. We have a very strong parabolic down move with an open sell signal and price still below the parabolic SAR dot. So again, this helps me weed out signals from either indicator. I'm going to ignore that one because I want to see a parabolic SAR switch align with the trade trend buy signal. Not really any, as far as parabolic SAR and trade trend, any current opportunities on Vapotherm, but there was a sell signal and a parabolic SAR switch from late last year and early this year, and still an open trade trend signal on this one, which appears to be in a continuation pattern. So one thing too, when you're using parabolic SAR and you get a parabolic move, like here was a big one to the upside, and now we've had a big one to the downside. They can only go for so long and so far. So generally when you get a big parabolic move, they're preceded by a big parabolic move in the opposite direction, right? So here was a big parabolic move to the upside. Now we're getting a big parabolic move to the downside. So eventually there might be an opportunity back in the other direction here. It's just not, there isn't currently one. And this is still an open trade trend sell signal. Let's take a look at one more.
All right, let's see. Microsoft MSFT.
All right. Oh, great. So here's another really good example. Let's see here. Zoom in.
He's saying it's moving pretty good after the close.
Aftermarket, yeah. Did they? Looks like they have earnings. They had earnings today. Are those aftermarkets? Yeah, so they had earnings aftermarket today. And it looks like they beat analyst estimates was 227, came in at 232. Yeah, one to keep an eye on for tomorrow. But here's another good example. So we had a big parabolic move to the downside. Great signal. There's a trade trend sell aligning with a parabolic SAR, bearish parabolic SAR switch, big down move, right? Here we got the trade trend buy signal preceded the parabolic SAR, but we got the parabolic SAR switch within 2 candles of that switch. So again, the trade trend buy preceded, entry would have been above the high of the forecasted directional candle here back earlier in January. there's the trigger, there's a parabolic SAR switch, and this one's off to the races. So this was a great signal and kind of how to use those two together. And there, again, was also a really nice sell signal leading up to that. And, you can see how there's counter trend signals that using the two in combination would have helped you avoid in previous signals. So yeah, this is another good one. Resistance, we do have, we'll see tomorrow after the reaction to earnings, if we can break this resistance level. There is resistance at 245. So without looking at the aftermarket pricing, of course, that's never set in stone until we really get live market prints. But we do have some resistance to get through at 245. So we can sustain a close above 245 tomorrow after earnings announcements. Then I think that Microsoft has more room to run to the upside if we get a close below 245 after earnings. We likely will see a retracement back to the downside. So tomorrow we'll provide more clarification there. So yeah, those are some really great examples to look at as it relates to parabolic SAR and trade trend in combination. They're kind of a real powerhouse when used together. So great thing to practice. Look for those signals to line up. Again, you can use them for any asset, any time frame, just using the default settings for both trade trend and parabolic SAR. So I hope you guys got a lot out of that tonight. Any final questions to wrap up? Thanks, Jose.
I think we're all set.
All right. Well, I wish you guys a great rest of the trading week. We'll be back with you next Tuesday, same time, same place. Have a great rest of the week. Keep an eye on those key levels we looked at on the S&P and the NASDAQ, and consider those in the context of what the VIX is doing. And we'll revisit all that again next week, along with a brand new strategy. So we'll see you guys next week. Have a great rest of your week.